because there is where we see the evidence of what happens when a foreign central bank sells a boatload, not a truckload, a boatload of treasury bonds. The yen went down, Chris, 23% in 12 months. And the BRICS nations are watching. Okay, this is almost hilarious. The central banks are going to manage their own insolvency. They're all damaged by holding too many treasury bonds during this interest rate hike sequence that will not stop. We're going to see the dollar rise, then rise some more before it vanishes.
According to Jim Willie, editor of the Hat Trick Letter, actions taken by foreign central banks, mainly their substantial sales of treasury bonds, are setting the stage for significant financial turbulence. When foreign central banks release significant treasury bonds into the market, it can have profound and wide-ranging consequences. In fact, analysts at JP Morgan estimate that Asian central banks, excluding China, have sold over $30 billion in reserves, adding to the complexity of this situation. Central banks are struggling with the consequences of holding too many treasury bonds in a time of rising interest rates, and there's no clear end in sight to these rate hikes. As of January 2023, foreign countries own a staggering $7.4 trillion in treasuries, accounting for roughly 24% of the total U.S. debt. Over the past 2 decades, central banks and other government entities have held 50 to 75% of foreign-owned debt. Jim predicts that the U.S. dollar will continue to strengthen as authorities strive to raise interest rates further to attract buyers for these bonds, making this a linked series of events that could substantially impact the global financial landscape. Jim observes that despite being a close ally of the United States, Japan has quietly sold a significant amount of treasury bonds, a fact that doesn't receive much attention. This provides concrete evidence of the impact of central banks offloading large quantities of treasury bonds, which can lead to currency devaluation. The Japanese balance of payments data clearly shows that the life insurance sector has become a net seller of foreign bonds from March 2022 onwards, with sales of around $35 billion over the last 12 months. This massive sell-off had a substantial impact on the value of the yen. This situation has been ongoing for several months, and Japan has been unable to extricate itself from the crisis. Japan has resorted to printing money, further weakening its currency. Throughout this turmoil, they have also been accumulating gold. We will bring you clips from Jim Willie's interview with Arcadia Economics. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Chris, we're going to continue to raise interest rates, and we might have longer pauses, but we're going to continue to raise interest rates, or else we're going to face the embarrassment of a bond auction failure. They've got to continue to raise interest rates. They are of the belief that a higher bond yield will attract buyers. I think if you look back at their past statements, almost nothing made any sense, and nothing occurred as it was laid out. They're trying to produce calm in the bond market. They'll do and say anything to produce calm. I don't give a damn about their words. I don't think that they tell the truth. I don't think they ever tell the truth. And I think we learned in the Patriot Act and the Financial Regulatory Bill of 2008, Dodd-Frank, lying as national policy is good business. They're liars. I don't dissect the nonsense of their words. I laugh and I work towards something that's important, not the FOMC bullshit. You remember what the bullshit was in the 90s? Well, how thick is Greenspan's suitcase? Okay, that was the bullshit back then. The bullshit has never stopped. And I don't get locked in to the bullshit. What I look at is what was the record that was set in June and July for foreign central bank dumping of treasury bonds. And then we heard a story that China, Brazil, and Saudi sold $19 billion worth, and they think that's a lot. Well, it's not. You want a lot? You got to look in Japan. Why is not Japan in the news? Because they're an ally. Why don't we get told that Japan sold almost $200 billion of treasury bonds in a 12-month period ending in October of 2022 because they're an ally. Because there is where we see the evidence of what happens when a foreign central bank sells a boatload, not a truckload, a boatload of treasury bonds. The yen went down, Chris, 23% in 12 months. And the BRICS nations are watching. Okay, this is almost hilarious, but it's tragic. It's interesting, it's intriguing, it's paradoxical. The Japanese are showing us what happens if they do an Operation Sandman. You wreck your domestic financial system. You cause a domestic credit crisis, and you don't get out of it. Japan has been stuck in it now for close to a year, like 8 or 9 months. They're not getting out of it because with the decline in their currency, the foreign holders of Japanese government debt, called the JGB, Japanese government bond, JAGs, the JGBs went down in value. So foreigners dumped it. And the Japanese had to print money to do further damage to their yen currency in order to buy their own debt. And they've not gotten out of the crisis. And during all this, they're buying gold.
Jim observes that Zimbabwe is actively promoting the conversion of U.S. dollars into a gold-backed digital currency, indicating a shift away from traditional fiat currencies toward a more tangible and resource-based monetary system. The country aims to introduce this gold-backed digital currency as a legal tender to stabilize the Zimbabwean dollar, ZWL. Zimbabwe's central bank is at the forefront of this initiative to expand the options for daily transactions and strengthen its national currency. This move could potentially represent a broader trend towards asset-backed currencies, with gold and diamonds being considered as potential foundations. In addition, Jim highlights that recent conflicts in Israel have diverted attention from developments within the BRICS nations. Approximately 1 week after Hamas initiated a multifaceted assault on southern Israel on October 7th, the situation has calmed within Israel. Still, Israeli airstrikes have struck Gaza on an extensive scale. Tensions have also escalated along Israel's northern border, and violence in the West Bank remains heightened. While these geopolitical issues may be diverting the BRICS nations' attention, they persist in their efforts to reduce their reliance on the U.S. dollar. Let's get back to the interview.
And the BRICS nations are paying attention because Zimbabwe is going to issue it, use it, and make it well known. And we didn't have a good phone connection. He said, Zimbabwe. And I said, where? Zambia? He said, no, Zimbabwe. The second B in Zimbabwe is silent. It's Zimbabwe. He believes that Zimbabwe is going to be a gold and diamond wealth center, what could turn out to be essentially an African central bank that will be gold and diamond backed, not currency backed, but the bank will be backed by it. The central bank will be loaded with gold and diamonds. And they're going to do development bank loans with their neighbors, and then far and wide could go all the way to Egypt, go all the way to Nigeria. That's it. And that is now a legitimate denomination for a bank account in Zimbabwe. They're urged to convert their dollars to gold token in Harare, the capital. This is going to get very interesting, but I got a very important point to make regarding Israel, the war, the distraction, the violence, and it's all horrible. Loss of life, a lot of loss of life. Here's the point. BRICS has been now distracted by this conflict. This is one of the points I forgot to mention, but it came back, and now that we're on this topic. Iran and Saudi Arabia were making nice, along with UAE and Oman and Qatar and Kuwait. All those countries were making nice. And the Iranians were opening their embassy in Riyadh, Saudi Arabia. A lot of that is put on hold now. There are a lot of BRICS projects that are put on hold now. But what is not on hold and will continue on its tragic and merry way is the de-dollarization, the dumping of treasuries, and the non-usage of the dollar in trade settlement. The BRICS are distracted, but nobody is delaying in any way, shape, or form the de-dollarization.
Foreign central banks reducing treasury bond holdings will impact currency values and interest rates, leading to economic and global power shifts as nations manage debt and currency values in response. How do you think the ongoing actions of foreign central banks regarding treasury bonds will affect the global financial landscape? Share your observations in the comment section below. Also, ensure you like this video and subscribe to the channel and turn on post notifications for more videos like this. Thanks for watching.